Welcome once again to this afternoon's session on fundamentals of ABM 1. For this topic, this topic probably will cover 2 weeks of discussion. I intend that for this week, we are going to focus first on the theories, meaning you should expect that your ST for this would be purely theoretical. The next week, we could have an extension of the discussion to do the computational aspect of the lesson. Computational, which of course includes the making of journal entries. So we'll have many of these activities done next week. But it does not mean that we can start it this week. We can. We can actually start doing that this week, and then we can spare the rest of the days next week for added problems and activities to work on. Okay. So, this discussion revolves around business transactions and their analysis as applied to the accounting cycle of a service business. By the way, I've already sent a copy of the module in our group in Fundamentals of ABM 1. Have you opened the module already, Nathan, Nicole? The module is already there. Let us be reminded that when we run a business,
not yet.
it's there already. Please be reminded that in the running of a business, income can come in two types. For those industries which are in the service sector, they recognize income as service revenue. Whereas those who do manufacturing and merchandising recognize income as sales. For this afternoon and for the 2 weeks that we have left for pre-fi, we are going to focus again on the service business. Thus, we're after of service revenue. Important 5 terms are to be defined once again, though these terms have already been mentioned before. For instance, you have the word assets. Nathan, what are assets?
These are control resources and controlly owned by the business, firm by the business.
Resources. What do you mean? What again? Resources.
Resources owned by the business.
Resources owned by the business. Correct. What about liabilities, Nicole? What are liabilities? Nicole?
These are the, ano sir, the things like um notes payable, accounts payable that owed by the company.
Owed by the company to another
That also.
business, to another entity. So these are claims against the assets of the business as that company owes it to another company. So these are liabilities. Equity, Nathan, what is equity?
It is the claim of the owner.
So you have the claim of the owner or owners represented by equity or capital. That's their share. What about income and expenses? Let's start with income. Nicole, what are income?
Income or increases in the equity or capital.
As it results from
Results from business activities entered into.
correct. So once a particular company enters business activities, the profit or the income they generate or the increase in equity or capital that they get from it is an income. Expenses are the opposite. They decrease capital or equity, resulting from business activities. So you have here the accounting cycle as well. Journal entries, when you've been doing the journal entries, you've been part of the making of the doing the accounting cycle. The accounting cycle begins with step 1, talking about transactions and or events. Let's be reminded, not all transactions have to be recorded in the books of the company. Familiar with this? You've made that mistake in one, I think it was in a QE, in a quarterly exam, no? That you made the mistake of recording in the
Yes,
journal
sir. business
as
finance.
an activity that should not have been recorded. You also have possible situations like hiring and termination of employees, the death of the owner, recognition from the government as most outstanding business. These things have nothing to do with the business records. Should they be remembered? They can. They can be placed in narrative. A report can be made about them, but should they be reflected in the books of the company? No. There's no need to do that because the books of the company entail information that have monetary equivalents, financial transactions. Remember the definition of accounting? Financial transactions and interpreting the results thereof. These words are found in the definition of accounting, which means that we are really after transactions that have financial involvement. Without that element, we cannot. You don't have to make a journal entry. Information can come, the information that you're going to record from these transactions can come from an official receipt or a cash receipt. It would come from a charge invoice or sales invoice, or it could come from a check or cash voucher. How do these three possibly look like? Allow me to share screen this one quickly. This is an example of an official receipt. This one, the one with business name and business address, that is an example of an official receipt. A sample of a sales invoice. This is a sample of a sales invoice. And the third one is an example of a check voucher. So you look at the information found there. You have pay to particulars or like what are actually included there, what's going on. Then you have the amount. Then code, account, title, debit, credit. All of these will have to be reflected in the cash or check voucher. Step 2. What happens in step 2? Preparation of journal entries or journalization, which you've been doing several times now. You've been doing a lot of journal entries already, right? Then step 3, you proceeded with posting, making the ledger, the T skeletons. So you've also done that part. Then step 4 though has not been done yet. We have not done step 4, and that is to create the unadjusted trial balance. How does the unadjusted trial balance look like? I'll share screen this to you. The unadjusted trial balance.
Mm.
That's your list of account titles.
Uh,
So here are the, anyway, you've had your share of journal entries already before. So here's the unadjusted trial balance. Here's how it's supposed to look like. I hope you can see this. You have account titles grouped according to the balance sheet accounts and the income statement accounts. And look, you have the debit side and the credit side. The total of the debit side should be the same to the total of the credit side. That's the goal of the trial balance. This time it's still unadjusted because you don't have adjusting entries yet. By the time adjusting entries come in, then we will have the adjusted trial balance. But there's none as of this time. Again, we don't have any adjustments yet. So this is what we can make so far. You have the name of the company here, the label that what has been made is an adjusted trial balance, and the date it created. So account titles, debit, credit. Let's try doing this. Let's try doing it. Can I stop the sharing of the screen now? Take note, oh, look at this order, oh. Debit, credit. Those are the only columns, but the third column is the column for the account titles, categorized according to balance sheet account titles and income statement account titles. Let's try. Shall we try? Oh, wait. Do you still have with you your records for Ruiz Capital?
Yes, sir.
Nicole, what about you, Nicole? Ruiz Capital, Rick Nicole.
Oh
Ruiz
my God.
Capital.
Ay, nakatago, sir. Ruiz?
Ruiz Capital, yes.
Yes.
What
Wait,
about
sir,
you,
wait.
Nathan? Do you have it with
I'll
you?
find Ruiz.
I'll find so, sir. I'll check it, sir.
For a while,
Yes. Yes, sir.
okay, that's good. What about you, Nicole? Nicole,
Sir?
do you have you found your Ruiz Capital accounts?
Wait, sir. Nasa labas ata.
Oh, anyway, Nicole, let's just do it this way. I'll mention, let's assume that you've made that ledgers already. You've done the posting. What's
Sir?
going to happen?
Ah,
Let's assume that you're done with the posting.
okay, sir.
Oh.
I'll mention the ending balance of each account title.
I see, sir.
And then you'll make the unadjusted trial balance.
Yes, sir.
I'll get some paper, sir.
Yes, yes. And then you show me your answer. You show me your answer. Nicole, I hope you can show your answer.
Yes, sir. I'll
Okay.
open na lang yung camera ko later.
Cash. Cash. 70,700.
17, sir.
70,700. Accounts receivable. 32,500. Supplies. 11,500.
What, sir? Accounts?
Nicole.
Accounts receivable, sir.
32,500. Supplies. 11,500. Accounts payable. 4,750.
4,000.
750. Capital. 100,000.
100,000.
100,000. Withdrawals. 10,000. Service revenue. 77,500.
77,000, sir.
Again, sir, withdrawal.
Withdrawal is 10,000. Service revenue 77, sorry, 77,500. Rent,
77,500, sir.
yes, yes. Rent expense 25,000.
Sir?
Rent expense 25,000. Telecommunications expense 9,800.
20,
9,800 telecommunications expense. Miscellaneous expense 7,750. Again, miscellaneous expense
7,000.
7,750. Salaries expense 15,000. Go create the unadjusted trial balance.
telecommunication expense are 9,800.
98, yeah. Now make the unadjusted trial balance.
Oh, excuse me. Ay, Joe.
Take note, the goal of the unadjusted trial balance is to see the equality of your debits and credits. Ready?
Wait, sir.
Nathan, can you show your answer if you're done?
Kuan, sir, ano sa ni? Double underline, pagyapon, sir.
Of course, of course. You have to double rule it.
Both laser. Both,
Yeah.
both sides.
You show your answer to the camera. Okay, correct. Take note ha, the account titles are grouped as balance sheet accounts and income statement accounts.
Statement.
Ano ulit yung 25,000, sir?
Rent expense.
Rent expense.
May ibang asawa, hindi asawa. Narinig na ninyo. Kayo na, ha? Kung kayo na ang magkakaroon ng asawa in the future, wala si asawa, in Filipino, wife ka na, maging asawa mo kayo or husband or wife,
Nicole?
huwag yung gayahin yung pipigil sa tatlo or pipigil sa asawa, ha? Be faithful, be loyal. Like, um, kung nagkasala ang asawa, I will use the Bisaya term. Yan. Kung
Nicole, what's
nagkasala
your
ang
answer,
bana,
Nicole?
may ibang babae ang bana. Hindi ito ibig sabihin na magkakaroon din ng like lisensya ang asawa, the wife, na nahanap din silang iba para patas silang dalawa. Kaya ito ang mangyayari. Magiging wasak ang pamilya. No? I know.
I'll urinate, sir.
Go, go. While I wait for Nicole's answer.
Yung asawa niya may
Nicole?
kabit. Pero sila pa rin. Tapos yung asawa, cruel. Cruel yung asawa. Hindi niya inaaway ang kabit. Kahit tatlo na anak sa kabit ng kanyang asawa, hindi niya una. Ang sa kanya, overweight sa kanya, yung kanya husband, sa kanya policeman wife,
Correct.
female siya.
182250.
I cannot do that.
Again, ha, it's 182250. Give yourselves 5 points, Nicole. You and Nathan will get 5 points for this.
Pangatlong kabit na yun, i-reply. Saan mo kaya? Doon ka. Para mawala ang kabit. Kasi yung iba,
And then the step, no, the step, sorry. Step 5 works this way. You'll use a worksheet. Where's Nathan? Here's a sample worksheet of, like, look at the columns at the top.
Go kita, sir.
That's a worksheet. It has a lot of columns. The manual style would require the use of this. But as practiced now, I think people have devised shortcuts. So they will not have to anymore compete with the use of this manual accounting system. Then you have the sixth step, which is the making of adjusting entries. Adjusting entries are made because there are some accounts that don't remain to be in that value at the end of a particular business period. To deal with it, there is a particular way by which the remaining value is identified, while and at the same time,
Sir.
the value that has been lost is also identified. Yes, Nathan?
Ako, man.
Hello?
Hello, sir.
Hello? Hello, Nicole? Hello? Hello?
Hello, sir.
Okay. Two principles govern adjusting entries. The revenue recognition principle and the matching principle. The revenue recognition principle recognizes that revenue has been identified, honored, but it can only be recognized when it is earned and the amount is measured reliably. So you have there a sample. The sample is Matapang Computer Repairs amounting to 25,000 to the repair of the computers of Mr. Tamad. Payment for these services of Matapang will be made on March 15. So this transaction already accepts I think this one. Again, this transaction already accepts what could actually be earned by March 15. That's already recognized. But has the income already reached the hands of the owner? No. Nothing has reached the owner's hands yet. So that is part of revenue recognition. But the revenue has already been acknowledged. The revenue has already been identified. It just has not been received yet. Like the payment for it, the cash for it has not been received yet. Questions regarding revenue recognition. The matching principle works by directing a business report to the business to report an expense on its income statement within the same period as its related income. So matching principle has something to do with, for you to be able to earn some income, you have also expended some resources. So it's an in out give take type of relationship. How does that work? Adjusting entries can fall into five basic sources. What are these five basic sources? Depreciation expense, deferred expense or prepaid expenses, deferred income or unearned income, accrued expenses or accrued liabilities, and accrued income or accrued assets. These account titles are actually going to reflect, are powerful enough to reflect changes from the unadjusted trial balance to the adjusted trial balance. Depreciation expense or depreciation is a method for allocating the cost of an asset to an expense over the accounting periods that make the asset's useful life. Depreciation is charged for equipment, for land, no, except for land. Land is the only asset that does not decrease. Land increases. That is why if you wish to have already a slot in one of the funeral parlors or in one of the cemeteries in the province, you should already look for one. Well, the prices of lots and land are not yet very, very high. Once it becomes so high, then the land price has been appreciated so much, it just might not be appealing for purchase. So you have equipment, whatever equipment it may be, they can depreciate. You also have the formula for the computation of depreciation. Annual depreciation is equivalent to actual cost versus salvage or residual cost all over useful life. For instance, actual cost may be, wait, I think there's a sample problem here. So we have here a sample. I'll share the screen. Please look at the sample now. I'm referring to this. The formula for annual depreciation again is acquisition cost minus salvage or residual value all over useful life. Like for instance, you have, I'm looking for the problem. Here. The cost of the equipment is 25,000, estimated to have a useful life of 5 years. It is estimated that after 5 years, the office equipment can be sold at a scrap value of 1,000. What is then the value of depreciation using the straight line method? So that's your computation. So we have 25,000 here as the original cost of the equipment. You have 1,000 here on the other side, which is assumed to be the final value after settling all obligations. And then you have 5 here, our divisor, which will be representative of the number of useful lives, or the number of useful life, which is 5 years. So per computation, annual depreciation is 4,800. Like what I said earlier, for this week's ST, we will not yet do any of the, we won't do much any of these computations. They will appear in the ST of next week. So we have another one, depreciation, deferred expense, or prepaid expenses. These are items that have been initially recorded as assets but are expected to become expenses over time through the operation of the business. Like when a company does a prepayment of service, no, there's a particular term for that. A prepayment, uh, prepaid expense. For instance, insurance. Assuming that the prepayment is made for insurance, a 1 year's insurance. So, of course, let's assume that the business started in January. So, the company paid for a prepaid insurance good for 12 months or good for 1 year. So, not all of the months have been covered yet in the month of January. So, the rest of the months, payments for insurance are considered prepaid payments. They are paid in advance. So by the time the month of May comes, 5 months of the insurance have already been covered, while 7 months of the insurance have yet to be used up. So that's the purpose here. And then when the business continues its operation, then probably upon reaching the month of October, 10 months of the insurance have already been consumed, while 2 months more have yet to be used up. So how do we deal with that? Let's have this example of but this one is on a deferred expense or a prepaid. This is something to do with an item, not on insurance though. Matapang purchased 5,000 worth of office supplies on account. By the end of the month, 2,000 worth of these supplies are still unused. So how do we record that? To record it, we put supplies expense because this is the date of purchase. Look at this area that I'm highlighting. This is the date of purchase. So you have supplies expense, 5,000, and then accounts payable, 5,000. Taken from Feb 19, 2016. On Feb 29, at the end of the month, what's left would be 2,000. So look, supplies, all that remains in the ownership of the company now are 2,000. For supplies expense, 2,000. Another way of looking at it, which I find more appealing for interpretation, is this. This is an alternative method, which again I find more understandable than the other. Why? On Feb 19, it is said supplies have been purchased. So, di ba, you debit supplies. And then it's purchased on account. So, you credit accounts payable. That's for Feb 19. At the end of Feb 9, at the end of the month, you have to reduce supplies. How will you reduce supplies? What is the normal balance of supplies? Debit. To reduce supplies, you will credit it. That's why we have credit here of supplies. What is the expected remaining value of supplies again at the end of the month? 2,000. 2,000. In order to retain 2,000 worth of supplies, you should credit a 3,000 value. 5,000 minus 3,000 is 2,000. 2,000 is what remains of the supplies. And then you have here debit supplies expense. Question so far? At any rate, it's a note here of, sorry, whatever your approach is, what's important is that the remaining balance for that account has to be the same. The balance needs to remain the same. But let's try to agree for the three of us, Nathan, Nicole, let's agree so that the checking will not anymore be confusing. And so that you'll have only one angle of answering this, let's use this style.
Yes,
Let's
sir.
use this style.
I told you last
Nicole, Nathan,
last
let's use this style.
meeting.
Okay.
Yung nasa taas, sir? Ay,
This one,
dito.
the one that I'm
Yes,
highlighting,
sir.
Nicole.
But I think ilang member lang yung
Okay.
Yes,
So,
sir.
Let's try ha, let's try. I'll give you a sample transaction. I'll give you a sample transaction and then you record
the one in my
the entries, journal entries as well as the adjustment.
okay, kasabot ng kuya eh.
Okay ha, let's try, let's try. Okay.
na
On May 2, May 2,
that was hindi naman
May 2, May 2.
approval din bayan.
The company paid for a 5 months insurance policy on cash.
Try to ask yourself if that
On May 2, the company paid for a 5 months insurance policy on cash.
we don't like to
Amount is 100,000.
it's like
5,000, sir.
100,000. 5,000.
diba parang hindi sadya na may pasa mo
Go. What's the journal entry?
namin.
Show me your journal entries. Again ha, on May 2, the company paid for a 5 months insurance policy. 100,000.
Pinakadalang mo dyan, may sagot na, may set na, dahil hindi naman talaga sila na sagot. Diba? Wala pang gawin ang Google para sa mag-aaral.
Then you show me your journal entries.
What pa, but I don't know kung this is pero kung hindi rin makapagsagot ng tama or hindi makapasa sa ST, ito lang siguro ang doubt namin na ang module, kung hindi naman may module, di ba? Hindi naman dyan ang module. May pumapasok pa din ba na parang teacher na magbasa lang, tapos magsasagot ka, like this, mag-discuss tayo, magbasa kayo, at magsagot ng module, at least ngayon man lang pumasok yung
What's your journal entry?
Tinanong ko, wala rin response. Oh.
May 2, May 2.
Sige, Marila,
Show me your journal entries if you're done.
can you give me a thumbs up? Wala rin response. Marila. How about the rest?
Ito, sir.
Wait, Nathan, I cannot find your journal
Ayun,
entries.
sir.
Nandito sila
Yes,
sa
sir.
online.
Okay, prepaid insurance, cash, correct.
Oh, no? Anyway, kahit di na narinig yung buro,
Nicole, have you also had prepaid insurance and cash?
Tuesday, July. Pagsasanay 1, isulat sa linya ang mga
Prepaid insurance, cash. Okay. Okay. Thank you. Let's proceed now to May 18. May 18. No, not May 18.
Kilalanin ang mahalagang detalye mula sa bidata. Isulat sa
This happened, this ran for an entire year, man. Let's assume that the business ran for an entire year. It's an entire year's business, ha?
wait.
Let's put it at
I am having the wrong
May, June, July.
Can you read the one at the back?
May, June, July, August, September.
Can you read the first part of the
July 2.
or module para na to?
July 2.
Unmute yourself.
Oh. What will you, assuming that July 2 is the third month covered by that insurance policy. So how much will you record? What, not how much. What shall be your journal entry now that 3 months have already been used up for the insurance? What's your journal entry? What's the adjusting entry now that 3 months have been used up? Use the format that use this form as agreed. Ha, you will use this format that we have that I'm sharing to you right now.
Pagsasalaysay at
Issue.
paglalaan. No? So, una sa lahat, pag sinabing pagsasalaysay at paglalaan, yan ay mga karaniwang paraang ginagawa ng tao para
So try to compute, of course, if the total cost of the insurance policy is 100,000 for 5 months, how much are you actually paying for every month?
o panindigan ukol sa isang paksa. Sa maraming pagkakataon,
How much are you paying for every month?
pagsasalaysay at paglalaan ay
Which is, sir?
100,000 insurance policy, 5 months. Every month
8,000.
you're paying for 20,000, correct?
Joke 5 months.
20,000.
100 divided by 5, Nathan.
I thought 12 months.
5 months. Go. So what's your journal entry for
3 months
3 months? Yes. Now that
yung nagamit, sir.
3 months of the insurance policy have been used up, what's your journal entry? Adjusting journal entry. You show to the camera. Huh? Are you sure about that, Nathan? Nathan, no, you look at the sample. Oh, you look at the screen. You look at the sample. Nicole? Closer, please, Nicole. Closer. What's your, I can't read clearly, Nicole. Sorry. What's your debit account title, Nicole?
Prepaid insurance expense, sir.
Then credit is?
I joke.
Prepaid insurance.
Correct. That's
Oh.
actually correct, Nicole. What's the value, Nicole? Nicole, what's the value?
Joke, sir. Joke.
40,000, sir.
You sure it's 40?
Nagamit pa. Ano ba ilalagay? 60.
60, correct.
60 din.
Okay, sir.
Yung,
bayad sa karaniwang ginagamit, karaniwang ginagamit.
60, sir. Yung nagamit,
Someone is
yung
talking
ilalagay dito, sir.
there. Someone is
Okay,
talking.
thank you.
It's
Yes.
July, sir.
What you should put there would be the value that has been
Akala ko
used
yun.
up. Like,
Okay.
again, let's try to go. Let's look at the transaction again on the screen. Look at the transaction on the screen. It says here that at the end of the month, 2,000 worth remains to be unused. Similar to the example, similar to the problem I just gave you, that means that 40,000 remains to be unused.
Okay, sir. Sorry.
So what has been recorded here on Feb 29 is the value of the X of the supplies that has been used up. So what you should have placed on the value is 60,000. And yes, it's correct. Your transaction placement, your account title placement, Nicole, is correct. You'd credit prepaid insurance to reduce the value of prepaid insurance. And then you debit prepaid insurance expense to recognize the using up of 60,000 worth of insurance that's good for 3 months. Questions? This is the reason why our discussion will really have to have 2 types of STs.
Wala po.
The first ST again that you'll have is a theoretical ST, purely theory terms. The second ST that you'll have will be application type. Okay. And then application type of this will be done, so many of the activities will be done next week. Like we will have practice activities, and then we will have a recorded activity, a recorded ST. We continue. Part of adjusting entries, you have deferred income or unearned income. These are items that have been initially recorded as liabilities but are expected to become income over time or through the operations of the business. Look, on Feb 15, Matapang entered into a contract with Makisig to maintain the computers for Makisig for 2 months, starting Feb 15 to April 15. On the same date, Makisig, the customer, paid the total contract amount of 40,000. Take note, the service has not been done yet, but there was already an agreement to perform the service. So the company, the service company, owes the customer service worth 40,000. That is why unearned revenue or unearned income is accounted as a liability initially, because you owe that service to your customer. You owe it to your customer. It's your due to them because they already gave you that amount. It's like this, ha? Nathan and Nicole, no. Nathan is the business, Nicole is the customer. Nathan and Nicole agreed that, assuming that Nathan is operating a paint job, a painting services. So Nicole and Nathan agreed on a contract where Nathan's work will last for 5 months. And then the worth of the service is 50,000. Nicole paid Nathan the total value of 50,000 even if Nathan has not yet done the service. So Nathan received cash. In the same way, Nathan owes Nicole a particular amount of service totaling to 50,000. And we term that service as unearned service revenue. And time after time after time, a portion of that unearned service revenue gets to be turned to actual revenue. Like, for instance, after 2 months, the total value for unearned service revenue will have to be reduced. How will you do it? The normal balance of unearned service revenue is credit. To reduce unearned service revenue, what will you do? You put that on debit. And since debiting unearned service revenue is now a recognition of the income that you have really earned, you will close that to service revenue. Again, ha? Unearned service revenue has a credit normal balance. To reduce it, you put it on debit. At the moment that unearned service revenue is debited, you'll put service revenue on credit to recognize that at that point when service has already been done, after the passage of time, when service has already been done, revenue can rightfully be acknowledged. Why can we now fully acknowledge revenue? Because you've already done service in exchange for that revenue, or that revenue can now be earned in exchange for that service. Okay, example. I'll mention a situation. I hope Nicole can hear us because Nicole was pushed out of Zoom. Anyway, the video recording is here. Example. Nathan and Nicole, I'll use your names. Nathan and Nicole had an agreement to work on a paint job, another paint job. That's good for 12 months. 12 months at a cost of 60,000. So the total cost is 60,000. What is, and then Nicole paid the value, paid 60,000 to Nathan. So what's the journal entry, Nathan?
Sabong isda mo. Wow. I went to their house I want
You're mute, you're mute.
spam is very simple. Lahat tayo pwede magluto ng spam.
Nathan, you're on mute.
Proseso.
Cash is debit.
And then credit,
Credit is unearned income.
unearned
Unearned
income, correct.
service revenue.
Yeah, unearned service revenue is the better term. How much is the cash, Nathan?
60,000.
60,000, correct. Then assuming Nathan, that 5 months has elapsed.
5 months.
5 months has passed. So what will you now put on the journal entry? Debit is
Unearned service revenue.
by how much?
12,000.
Huh? 12? Are you sure
Ah,
about
wait.
12?
5
much
months
are you-
mga 5 months mga sir na
Yes.
used.
How much are you paying for every month? How much are you supposedly receiving every month?
Joke with sir. Sorry. 5,000.
5,000. 5 months have passed.
30,000.
30. 5 times 5, 30?
Oh, 25,000.
25,000. Correct. And then that's on debit. What will you put on credit?
Credit service revenue.
Worth
25,000.
25,000. Take note, by debiting unearned service revenue of 25,000, that will reduce the total value of 60,000 to 35,000, which means that you owe Nicole a remaining value of your service that's worth 35,000. Nicole is finding it difficult to connect. Anyway, for Nicole, the video recording is available. So perhaps Nicole can listen to the video recording later on because it's already time.
Huh? Time na, sir?
It is. It's 1:29.
Yeah.
It's 1:29. So for now, that will be all. Nathan and Nicole, goodbye and thank you.
Goodbye. Thank you, sir.